Hey everyone, welcome back to the Save Money Calculator channel. If you're here, you're likely concerned about the future of your hard-earned money. And today we're tackling a topic that could shake the foundations of your financial security. Your savings at risk. 2026 collapse versus 1929 history. I'm your name, your trusted guide at Save Money Calculator, helping you navigate the ups and downs of personal finance with tools and insights to protect your wealth. With the current economic landscape shifting rapidly, it's time to dig into what might lie ahead in 2026 compared to one of the darkest chapters in financial history, the 1929 stock market crash. If you're new here, hit that subscribe button and ring the bell so you don't miss out on our deep dives into saving strategies, market trends, and how to use SaveMoneyCalculator.com to secure your future. Let's jump right in. First, let's set the scene. As of now, we're seeing whispers of economic uncertainty, rising inflation, tech sector volatility, and global supply chain challenges that could spell trouble by 2026. History often repeats itself, and the 1929 crash, which kicked off the Great Depression, offers a chilling blueprint. Back then, overleveraged investors, unchecked speculation, and a lack of regulation led to an 89% drop in the Dow Jones over 3 years, wiping out billions in wealth. Today, with markets more interconnected than ever, could we be heading toward a similar collapse? That's the question on every saver's mind, and we're going to break it down step by step using Save Money Calculator tools. Let's start with the parallels. In 1929, the stock market was riding a speculative bubble, much like today's tech-driven rally, with companies like Nvidia and Palantir pushing valuations to the sky. The finance chart above shows NVDA at 186.26 cents and PLTR at 184.63 USD, but these prices mask underlying risks, overvaluation, and reliance on AI hype. Back in the late 1920s, margin debt soared as investors borrowed heavily to buy stocks, only to face margin calls when the crash hit. Today, household debt is at record levels, and with interest rates fluctuating, a sudden economic shock could trap your savings just as it did then. But it's not all doom and gloom. Let's explore the differences. Modern financial systems have safeguards like the FDIC, which didn't exist in 1929, protecting bank deposits up to $250,000. Central banks also have tools to inject liquidity, something absent during the Great Depression. Yet, these safety nets might not hold if a 2026 collapse mirrors 1929's scale, driven by a tech sector bust or geopolitical unrest. Analysts on X are buzzing about a potential correction, with some predicting a 20–30% drop if earnings falter, echoing the initial 1929 plunge of 23% in 2 days. Now, let's talk about why your savings might be at risk. One major trap is keeping too much in cash or low-yield accounts. Inflation, currently hovering around 3–4% globally, erodes purchasing power, much like it did post-1929 when prices stagnated but costs rose. If a 2026 collapse hits, cash-heavy portfolios could lose real value, just as savers in the 1930s saw their money devalued by deflation and bank failures. Another risk is overexposure to stocks. While diversification is key, a broad market crash could drag down even blue-chip holdings. The 1929 crash saw bank runs as panicked depositors withdrew funds, and today's digital banking could amplify such panic with a single viral tweet. So how do you protect yourself? Start by assessing your savings allocation at SaveMoneyCalculator.com. Financial experts suggest a balanced portfolio, 30–40% in stocks, 20–30% in bonds, and the rest in cash or alternatives like gold, which spiked during the Depression. Use our free calculator to model how a 20% market drop might affect you, adjusting based on your risk tolerance. In 1929, those who held diversified assets or invested post-crash recovered faster. Lesson learned, right? Next, consider the warning signs. The 1929 crash was preceded by excessive optimism, margin debt spikes, and uneven economic growth. Sound familiar? Today, tech sector growth, while impressive, is uneven, with AI stocks like NVDA and PLTR driving gains while other sectors lag. If earnings reports in late 2025 disappoint, we could see a domino effect, much like the October 1929 Black Tuesday. Keep an eye on interest rate hikes, which could tighten credit and trigger a sell-off, a pattern seen before both historical and potential 2026 collapses. But let's not panic. There are strategies to safeguard your wealth. Build an emergency fund covering 6 to 12 months of expenses, a lesson from 1929 when job losses soared to 25%. Diversify into assets like real estate or commodities, which can hedge against stock market swings. And if a collapse hits in 2026, be ready to buy the dip. Post-1929, patient investors who bought at lows saw gains by the mid-1930s. Head to Savemoneycalculator.com to run scenarios and plan your next move. What about the global context? In 1929, the U.S. economy was somewhat isolated, but today's interconnected markets mean a 2026 collapse could ripple worldwide. Europe's energy crisis and Asia's manufacturing slowdown could exacerbate a downturn, making international diversification trickier but essential. X posts highlight fears of a tech bubble burst, with some users comparing current PE ratios to pre-1929 levels. Food for thought as you plan with Savemoneycalculator. So, what can history teach us? The 1929 crash lasted years due to policy missteps and slow recovery efforts, but today's governments are quicker to act. Still, a 2026 collapse could test those responses, especially if AI-driven sectors falter. The finance card above offers a snapshot. Monitor NVDA and PLTR trends as bellwethers. If their prices dip below key support levels like $183 for NVDA, it might signal broader trouble. That's it for today's deep dive into your savings at risk. 2026 collapse versus 1929 history here at Savemoneycalculator. We've explored the parallels and differences, the risks to your savings, and strategies to protect your wealth using our tools. If this resonated with you, give it a thumbs up, share it with friends, and drop your thoughts in the comments. Do you think a 2026 collapse is looming? Subscribe for more financial insights. And check the finance card above for real-time updates on NVDA and PLTR. Until next time, stay proactive, protect your money with Savemoneycalculator, and let's secure your financial future together. See you in the next video.